one of the most useful and complex indicators. Today we're having a third lesson on Ichimoku. Hey guys, welcome to Embry Cryptocurrency. My name is Nima and today we're having our third lesson on Ichimoku. And as always, I promise that I'll make Ichimoku as simple as possible. This is a strategy that I use as well, especially on the 4 hours on daily time frame and somewhat in a weekly. And this strategy gives you benefit of not holding your money in a trade that might gives you stagnation. And what I mean is, for example, when the price is going up, you better sell it in here. Maybe there's a high, but there's a lot of time wasted from this point to here, like half a year. So your money is getting like stagnated until you reach there. Maybe you could do another trade. Maybe you buy another altcoin or whatever. So you want to minimize this. So this is a strategy that works the best. And by the way, you have to consider this is daily time frame. So imagine by some situation, you just do your analysis. You want to wait for this position to break out and you buy in here for some reason. You want to have your best exit strategy to minimize the stagnation. Okay, what are we looking for is we're looking for the cloud. So we just add the Ichimoku. Let me just add it one more time to make it simple. It's very simple. We don't need a lot of these lines. So we don't need any of this. We need only the cloud itself. And maybe for sake of like make it a little bit clear, just add the upper and lower line as well, but I don't need it simply. It's just very easy to see whatever that we're gonna do. So what are we looking for is if we in a buy position, if you're in a long position, we're looking for the cloud to go down. So for example, compared to the last candle, but this is going up, 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 up until here. So as you can see, this is going down. And as you can see, this is a leading indicator, the cloud. It just shows what happened in 26 candles before. For example, it's here. Let me see. I'm just going to point it out here and then we go. As you can see, the cloud is 26 candles forward than a current candle. The analogy behind of it, the understanding behind of it is a little bit complex. I don't want to make this video complex. I just want to make it as quick as possible. But we have to go 26 candles back. Where were we? Yeah, we were here. 26 candles. Let's go one more time from here. 20, 25, 26. Yeah. So we just want to see where the candle closes. And if, for example, we're in a long position and this went down, we just put a marker here. If the price went below this, we're just going to close our position, a long position. And the reason is that shows that we got to have stagnation coming forward. And unless this one breaks up, we're still going to have a stagnation, but we have to look forward what's going to happen with the cloud as well. At this current position, we have to close it to minimize the stagnation. Let's go another example. Let's go with this as well. So for some reason, you just open another position as we had in here. You open another position at here. If you remember, the line was here. You open another position here, you want to see where do you want to close. You wait for the clouds to go up and down. This is a place that it went down. Let's see 26 candle back. 26, which is here. As you can see, the candle went below, so you got to close in here. So you got to close at least somewhat in here. So as you can see, roughly speaking, this is 16%. So this is a daily time frame. Don't think that's this price area is really like small. It's not. It's 16%. It's really big. And you can use it in many time frames. You can use it in a weekly time frame. Also, you can use it on a downtrend as well, but you have to look for the lower line of the Coma cloud rather than the upper line. So let's imagine you open this, you had an entry from this area. You just want to see where do you want to close it. You just wait till the cloud goes up. This is going down. This is going up. Let's go 26 candles. 26. So we should have closed in here, out our short position. So imagine if you open here, by some analogy, or maybe you had a breakout from here. You open, and 45%. That's pretty good. That's pretty massive, right? So this is one thing that you can use it in each pairs. It's not only on Ethereum that I use. You can go on Bitcoin. Altcoin, I would suggest to go on a weekly time frame because they have so much more volatility. But that's it for today. If you learn something, I would suggest to go have a little experience on it, practice to see how it is. because this strategy might give you a couple of noises if you work especially on a 1 hour and 2 hour time frame, as we know that the cryptocurrency has so much volatility. So you got to be careful with this. This works on a Forex as well, and it works better on Forex. But because this channel is about the cryptocurrency, we just mainly focus on cryptocurrency. Hopefully you like this, guys. Make sure to like and subscribe. And if you have any question, comment down below. Thank you.